The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here. Let me just get this chart of what happened over there. There it is. Everything's in sync. Good. So we're looking at the Dow. This is the Tiger Technicians Hour for Wednesday, the 9th of February. And what we're looking at is a very strong move up. 281 points in the Dow, 35,747. This is now a blue leg C. What does that mean? We're in a buy mode. Buy mode implies that the technicals have turned strong enough that there should be at least 4 higher peaks. The big issue here is that from the low of 33,150 in the Dow on the 24th of January, the high that was made on the 5th at 36,952, that is 36.9. So that's, we've got about 1,200 points. That's a lot of points. You can do it in this kind of market. Fed comes on, I think it's today they start to talk about the rates again. We'll see. I wouldn't be surprised if we're looking at some kind of a high that's being made in this particular part of the morning, and then some kind of pullback as we go into Fed speak. But the way the market is acting, the rotation that's occurred, and I'll discuss the different sectors in a moment, is telling me that there is very much, and we've been looking at this for a few weeks now. I'll do it now. Look at Marriott Hotel. Why would Marriott Hotel be at an all-time high today of 176.52, leg C in the daily, leg D in the weekly, and leg E in the monthly? If we were about to go into recession, maybe we can still go into the recession, but if we were in some kind of a recession right now, you would not see the hotels and resorts up at this level. Hilton, H is a Hyatt, I believe. Let me just go there for a second. I just put it in the wrong place. Right there. Look at this. H, Hyatt, also all-time high. Makes a high today opens at around number 100.00. So a lot of things happening here. Goes to 101.85. The last time it had 99 round number high back in third week of December, and plunges down to the 84s. Now it goes back to a new high. C in the daily, E in the weekly, and D extension in the monthly. Look at Hilton, HLT. So I'm looking at this and I'm saying, okay, let's try to assess what's going on. Hilton almost at an all-time high. Hilton Worldwide Holdings, hotels, resorts at 156.45. The last high was made with the others around about the 22nd of December, just under in the 159 area, dropped to the 200-period moving average. So what I'm saying to subscribers is the outdoorsy effect is really in play right now. And we're looking at that. And because of it, it's going to be very important. Now, I've mentioned that Disney is, they have all these different entertainment venues outdoors, but they also have the media aspect. And they have earnings today, I believe, after the bell, up at 274 at 145.22. I know Tommy O'Brien's been talking about it in his show at 9, the market kickoff, and it needs to fill the gap. And if it fills the gap and starts to trade in the 150s for 1 week, I'd say, you know what? The left side is kind of done. Now we go to the down move. Now we got to look at the right side as seeing buyers come in because of this potential normalization of both the economy and of our social structure. Are we missing that, or are we missing that? All right, let's get back to our story. The S&P, nice leg B on the upside, went to 45.95, stalled, stopped just under the 200 period, underneath the Chapman Wave Inside Track Repellent Zone. It needs to get to 4595.42, and that will say, aha, I'm starting leg C. But the MACD's MACD is good, but the stochastic's only at 71%, and the 9 hasn't yet crossed over the 14. So there's a lot of work to be done. Look at the QQQ. The QQQ is up 1.22%, Dow's up 0.80, S&P is 1.10, and look at this. That is a. Let me just move this away so it doesn't mess things up. This arch formation here, I always like to move it up. It's my pleasure to move it up, and I'm going to do that again here. And we're looking at the 370.10 high of about 6-7 sessions ago. Here you are at the 200-period moving average at 363.27, kind of stuck, kind of stalled. I suspect that this is still going to be the laggard, that we're looking at a rotation. The rotation says value, cyclicals, look at the SLX, which is the steel sector. Look at that nice move up. It's up only 23 cents today at 57.76. But look, from the 50 level to 57, 7 points in just 2 weeks. That's really good. This is cyclicals. This is infrastructure. This is what you want to see. VanEck Vectors, ETF, steel. So that's a good sign. IWM. On a percentage basis, they were pretty good yesterday based on what the others did. Here it's up 1.39%, still good, up 2.80 at 205.56. I'm watching this closely. This is a structure we've seen in so many charts that you come off the bottom, you try to rally, and you just kind of stall. But I'm prepared to give up some points to be assured that the IWM wants to go to the 200-period moving average, 215.96, the iShares Russell 2000 small caps. If we're able to see, this is leg B, but the MACD is good. Stochastic's way down at 56. So is this a laggard that says stochastic still has to go into the 80% area? You've got a ton of movement to the upside, or is it saying, oops, be careful, this is still stalling? I'm in the still stalling range. We'll see what happens there. Just wanted to see something in the E-mini, S&P E-mini. Yeah, it's also stuck in this rectangle formation. Remember, rectangle formation can last a lot longer than your patience. We'll come back to that in a moment. There's just too much to discuss first. And I want to go to the SMHs. Now, why are the SMHs still stuck in that lower range? This is the semiconductors. Well, automobile industry, some companies have to actually curtail their production. They just don't have enough chips. So that is an issue. Let's look at Ford. Is Ford finally bouncing? Yep, got a little bit of a bounce, up 34 cents at 18. Come down from 25 to 18, actually down to the 18, almost the 1882 level. Not good. General Motors also bouncing today, up $1.65. Let me just get this to work. There you are. Yep, a nice little bounce, but wow. A move from the 67s down to the 47s, and now trading is 51. A lot of work needs to be done. So as we go to the break, gold is only up to at 1829. It's stuck in that rectangle formation. If you're trading, it's a pretty wide range. But if you're looking at it in a weekly and monthly chart, wow, it is just stuck. I'll be back in a moment. Basil Chapman, Dow's up 271, S&P's up 47. We'll be right back. And all those questions that came in, we'll deal with those.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So a couple of questions came in. Let me just get to them because it's part of what I'm looking at. So gold, as I said, is up 2, now it's up 3. It's in this range. It's holding really well. But it isn't going anywhere yet. Silver, let's just do silver. Silver is down 0.01 at 23.18. It doesn't look as good. It's actually in the lower range. It's kind of much more stuck. But if you're looking at high-grade copper, notice this early this morning, high-grade copper is having a nice rally. It's up 0.08 at 4.54. And that says it too is at 2 is stuck in the range, in this rectangle range. Let's see if it's able to break above and hold above 4.61. And that's going to be the level to watch. Looking at the crude oil, as my engineer always says, crude oil. We're looking at crude oil up 36 cents at 89.72. The doji candle after that peak D on the left side chart, that's the daily chart, with the MACD turning down, just actually crossing a little bit negative right here, with the stochastic steady at 81%. I love over 80% and steady. With on-balance volume turning down, with the 9-period moving average still way above the 87.98 14-period exponential moving average. All I can say is, there is enough evidence that we've seen in all the different stocks. Let's just now look at this is not the multinationals in terms of it being directly related to crude oil, but of course there is a big relationship, but I mean, they can sometimes go in their own trajectory. But CVX made a peak E-top at 139.43, just over the 137 round number low that it had from around about like the 1st of February. And now it's in a holding position, but at the highs. If you look at XOM, it's at the highs. If you look at, and that's a peak C, I don't know, it looks like a D, but it is a peak C. If you look at MRO, which we're out of, we had, and it's made a peak E, holding at the highs. But if I look at the weekly charts of the XLE, I'm going to include here, the XLE is also in a leg C. So as I'm looking at this, it seems to me that energy per se, and that's going to be energy with the umbrella of oil and possibly a lot of things that are pertaining to energy. Let's just quickly look at NG, which is the natural gas after that. Look at that peak D. And you remember, I often say crude oil and natural gas so often go in different directions that it's really confusing. You have to treat them completely separate. Remember the Chapman wave peak Ds where other things can happen? Wow, at 557, 5.572 on the 2nd of Feb. Was that a turn down? That's the Eiffel Tower, straight underneath the 200-period moving average. So let's go back now. We're looking at crude oil. And what I am saying is that, yes, I do see some kind of a slide. I said to subscribers, I'm not going into the SCO. This is the, I believe it's a 3 times long, 3 times short, the USO, which is the United States Oil Fund. And that's gone to a peak D and just stalling a little bit. It's just too dangerous. Overnight, anything can happen. You're going to take Putin's word for it. He tells Macron, who's not being all that reliable as it is, oh, don't worry about it. Everything's cool. Don't worry about a thing. I had no intention of doing anything, just going for a little exercise, a little walk in the park. I wanted to get my soldiers some exercise. Yeah. So anyway, that's why crude oil is still hanging tough. Now, meantime, back at the ranch, what we are looking at is, if you're looking at the TLT, it is up 75 cents at 138.92. You see this tiny little doji candle here, the little plus sign? I love those, especially when they occur at the potential. I just say potential. We have no idea. This is like midweek. You've got the whole week for the weekly candle. But I am saying that there's a chance that the TBT, which is the inverse of the TLT, Lehman, this is the ultra-short Lehman 20-year Treasury bond ETF, made a peak F/C. It looks almost like crude oil right here, not the weekly, but the daily. And it looks to me like it could pull back a little bit towards the 1850s. If it breaks under 1820, then the 200-period moving average of 17, let's call it 18, will become a magnet. I don't see that just yet, but we'll see what the Fed has to say. And I suspect that intraday, if we're looking at the general market, and one of the reasons why I wanted to show this earlier, and I think I forgot to talk about it, is that this rectangle formation we had it. In fact, I wonder if I can pull this right across. Yeah, look at this rectangle formation, how long it lasted in the 1-minute chart of the E-mini from the peak D high that was made at 8:13 this morning. It got stuck between the range of, we'll have to go back, a range of, let's call it 45.54 and 45.57. I can't believe that it got stuck in that range for so long. And then what did it do? It made a peak D, pulls back, peak A, B, C, D, it pulls back, and then it breaks out into this huge move to a peak F at 45.69, pulls back quite sharply, rallies to peak A, peak B, and then a double top. And I suspect, I'm just suspecting, I'm not saying that's going to be the case, I suspect intraday for the first part of this, the morning part, going maybe even into 1 to 2 o'clock when the Fed comes out, if they are having any discussions there. I don't know if I've seen anything about that, but they obviously, it's important what the Fed does. That 45.68.75 high that was made, if we break under and hold for 15 minutes underneath right there, under 45.54, then I think we've made some kind of a top. And then we'll see if after the Fed we can have another burst of energy. This has been spectacular the last couple of days. But in a way, I think the market's got a little ahead of itself. We're not complaining. We've got any long positions, no shorts at this particular time. And what we're looking at is trying to be separated from the market in a way and trying to look more at the potential for the normalization of socializing for things like the hotels and resorts in this particular period. And that's why Disney's earnings is going to help some of the stocks that are much more pure plays if Disney has a really good outlook. All right, let's come back to what we were looking at. So, there come the questions. Whoops. Sorry, okay. The first one was, I think I can see it over here. Yes. Okay. So the airlines, this is a good indication that something's going on that's kind of positive. You've got the jets, the U.S. airline ETF, up 50 cents at 22.98. What does that say? That's basically saying, yeah, there was a takeover talk yesterday, and that kind of helps. But no, it says this is important. This is a nice breakout. The weekly chart is going to a leg B, not a big B because it's just barely over the left side peak A. But in the new, if this is a brand new B instead of an F, above the 200-period moving average at 22.57, having jets power higher like this, up 2.25%, that is a big deal. And I think that we're starting to see a lot of investors saying, you know what, I think we got to be ready for some kind of activity that is more normal. And the normalization says maybe the market wants to do that as well, regardless of what the Fed says. I'll be back in a moment.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Let's go one step at a time. So we spoke about the U.S. bonds. We spoke of the TLT. Nice candle today, first green candle we've had in a while. It hasn't done anything, though. It needs not just at 153 and 6/32. It really needs the 153. Yep, it needs the 154.5 to reset very quickly, and then the weekly needs to hold in the 155.5 to 156.5 area, so that the candle that's forming here that helps the stochastic at 14%. As it pulls back, you want to see the stochastic in the weekly go to the 22% or higher level, with the histogram finally improving. I don't see that yet in the bonds. So to me, and if you look at the TBT, it's the exact opposite on the upside. Look, 87% in the stochastic in the daily. MACD is good. The 90 is way above the 14. It's just at this particular point, there's still too much strength, and that takes me to, because I always look at the yields together with high-grade copper and wood, which is the WOOD, which is the iShares Global Timber and Forestry ETF, and that's fabulous. Look at this. Peak A, peak B, it's in leg C, going towards the most recent highs, and the most recent highs is close to where you get the at least the all-time recent highs, up in the 95.27 was the last high, but the major high before that was, and I forgot to put that in, no, it wasn't there. It was here. 98.98. I remember 98 double. 98.98 on the 10th of May. And Doji Candle, Island Reversal, and that just plummeted. So wood is acting extremely well together with high-grade copper, in the sense, under the pressure of what we're looking at market-wise, under the pressure of the tech sector having broken down and not yet quite coming back. Let's just look at ARKK. It just is an easy way to look at the, nice move up today, up 2.66 at 75.04, up 3.66%. So this particular pattern right here says that to break away from the whole trading in the 77 down to the 64 area, you want to see a move above this trend line, and that'll take it to maybe 80. You want to see within a week from today, Wednesday a week, you want to see ARKK, this is the ARKK Innovation ETF, up in the 81 area, and then I'll say, you know what? There's a really good chance that the low that was made on the 29th of January at 64.35 is not necessarily the low, but it's a low of importance. And that's the way I'd be looking at it. Now what we want to look at is, so I've done all that, done that. Okay, so questions that came in. Could I look at GE? Yep, GE is acting quite nicely here. It's had a cluster formation above the 200-period exponential moving average of 98.86. It's at 100.39. It's up $1.08. As I say, I think that GE is in now the area that is kind of the cyclicals that were just horrible and failed completely in an Eiffel Tower A pattern, going from 88.17 back in December, soars to 103.73 peak A in the Chapman methodology, also makes a cluster formation, but on the fourth bar, plummets down and then takes out the 200-period moving average and slumps to the 88.05 for a double bottom potential. Now I can start to join the patterns that we look at here in General Electric to say, it's not to say this is going to scream to the upside, but it says now it's a much sharper, a quicker move like that. But the real pattern that I'm looking at is in the weekly, where you've got the dreaded H pattern. Even though it went under it, in a way it's a successful one because it's trying to head towards the 103.73. If General Electric in February closes on a weekly basis above 105.30, I think it started its bigger move to the upside. I wanted to spend a little time on General Electric. I've spoken to my subscribers about it. We don't have a position in it. I got a feeling at this point it's not a rush to get in, but at some point when it starts to accelerate, it could make this big move up. I don't know about going to the 115 high that it made back on 116.17 on the 9th of November. 119 down to 88. That's a big move down. So I suspect that it's going to be a slow move, and then it should start to accelerate as more people say, hey, what about GE? Can the oldies become the newbies? And that's what we're looking at. IBM was the question there as well. IBM. This is a little different chart pattern because that monthly chart has a tremendous amount of work in order to, look at this, 206.22 in IBM, March of 2013. What was March 2013? I mean, That was, I would definitely call it 8 or 9 years ago, right? So what we're looking at here is General Motors has been in a disservice. It is not, I don't know what they've done, but whenever I heard, IBM's turning themselves around, they've gone into the cloud, they've gone into this thing. They did everything wrong, and I suspect, like General Electric back in the after the Welsh days when it went to, I don't even want to mention his name because he was so bad. It went to the other guy who did everything wrong, bought the oil at the wrong time, bought the financials at the wrong time, just did everything wrong, even bought the building in Boston down on the waterfront, which gets flooded every once in a while, the brand new building, and then had to sell it. I did everything wrong. But I suspect that IBM has done that, been there, and there's a chance, and we'll only know by the stock price. If IBM, a lot of people say, what has been lagging? What can we get as intermediate term positions that has the potential? I don't see the potential yet for IBM. There's still a little bit of grinding and work. There's a long-legged doji from January that it has to deal with in the monthly chart. But the MACD is improving. The stochastic still lousy at 57. And the on-balance volume, of course, that's the total number of up days subtracted from the down days. Added to the down days. So that can take a long time to repair. But if this on-balance volume in the monthly chart, trading way down here, is eventually going to get to the overbought level, IBM will be in the 280 level, more than double from where it is. I'm just saying that's the way it would work if that was to take place. But at this particular point, it's just something to keep in mind for longer-term positions, maybe within the next 10 points or so down, I'm saying. That's where you maybe would like to start. We'll look at it closely. But I just don't see it right at this moment, especially since today's such a powerful day and it's only up 0.51%. So it's really not participating. But keep it in mind that the old laggers like the Microsofts, etc., eventually turned around. We'll see if IBM and General Electric are able to do that. Question in the den, DAL. A couple of places DAL was mentioned. Yes, Delta Airline, look at that. Here's a pattern that you want to look at. Let me just draw it in. Delta Airline, DAL, up 1.11 at 43.73. That is very nice. So just on a short-term basis, I love to look at these, and I always look at them and I say, okay, what does it mean? Well, if you look at triangle patterns or wedge patterns going from lower highs and higher lows meeting, you've got a pattern that says nothing unusual here, but it's starting to improve on the monthly chart. It's the weekly chart that says if this is leg C, if it's able to get to 46.50 by next week, that's going to be a big deal for Delta Airlines.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yes, a question about the 2-minute chart on oil. Crude oil is a continuous contract. Made a nice low way back at 88.41. There's a continuous contract at 40 minutes past 8 o'clock this morning Eastern Time. They made a three doji candle high at 92. Is that 82? Yep, 82 at 32 minutes past 9, just after the open. Then went to a peak D, a very quick peak A, peak B, peak C, peak D. Remember, that's where you got to be careful. D 89.84 pulls back. And this move, this big spiral to the upside, there must have been news, right? In fact, I made it a peak E, but I didn't do this carefully enough. That was a peak A, a B, and is that a C? Yep, and that's a C, I believe, and that's a D. So it's either a D or E. But that spiral, was that news? Oh, that's where they come out on a Wednesday with news. So that spike to the upside, I think, is a rogue wave. It's got a little doji candle and peak E with a high of 90.58. It's pulling back. I think it's going to be pulling back. This might be the high for the moment. This is a 2-minute chart, of course. I'm not saying this is the high. I'm saying this is the high that I'm looking at. I think it's going to pull back. And if it starts to trade under 89 at any point, that'll confirm that was just a rogue wave. It's a news event, upcycle. And let me just look at the, this is the 10-minute chart, if I can do that. That's going to peak A, B, and that's a C, huh? Oh, where was the low? Yeah, A, B, C. All right, well, it could be a failure, but anyway, we're looking at that. So that's there. Now, let me just go back to the E-mini on the 2-minute chart, ESH22. There it is. E-mini, I haven't notated it. All right, so from this one, it's gone peak A, peak B, C, D, E, double top, and then it made a nominal high F, and I think at 45.85, 65, we're watching this closely. I'm still going to say over the period of the next hour and a half, any close below 45.50 says, oops, be careful, that could have been the high of the day. The afternoon session has to then restart completely differently. All right, let's just get back to our markets. Couple of questions. So yesterday we were looking at HCP for actually two. It turns out 3 people had mentioned that. HashiCorp, define infrastructure as code to test security in low trust environment. I said, this is a fascinating stock. Let's just keep our eye on it. But I'd also said, even though it's an IPO, the fact that it has the same pattern as so many of the others, and in the others, when I'm talking about, what was ME? ME, this is, ME, which is the 23andMe Ancestry Research, MJ, which is the cannabis sector, just this sharp move down, and then makes a move. And this is just starting to improve. This is MJ. We haven't got anything in it yet. I'm not averse to starting a position. I need to see other things first. I think CGC comes out with earnings today or the next day, whatever it is. But I need a trigger for the upside. And it's all the legalization is one thing, but the legalities that are involved, that's another thing that really is a big issue. I think later in the year, MJ just comes on powerfully. And you're talking about an ETF in the cannabis sector, ETF alternate harvest, actually starts to trade sharply in the 1822 area, somewhere like that. Okay, now let's do this. A couple of questions came about the VIX index. First of all, I'm going to get to the VIX index, but I need to type it in correctly. VIXX, there it is. So right under the 200-period moving average at 20.39, just a few pennies below. So this move up reminds me of what I was looking at. And I have to say, there are a lot of Scandinavian countries, but what is it with Norway? Over the years, Norway in the Winter Games has just out-medaled everyone. And I was watching this guy last time. What is it, Rhodes? I had to write it down because I knew I'd forget it. Burke? I think it was not Bert, but Burke, B-I-R-K, I think it was. I can't find it here. Rhodes. Anyway, I mean, it's one thing seeing people, taking off somewhere. But to take off and get to those heights and then do those tricks in midair is one thing. So the height is one thing. Doing the tricks is a second thing. And then to land, most of the time, not with your toes facing downhill, but with your heels facing downhill. Unbelievable. What skill, what effort, what gymnastics, what athleticism. Bravo, and bravo to Norway. I know we do have some Norwegian subscribers and TFNN listeners. Bravo to you guys. All right, so this is what reminded me of it. You see this beautiful slalom, this beautiful leap to the upside to 38.94. And this is the first time I've had to include both, I'm putting in COVID, inflation, inflat, and Russia. Who knew we were going to be putting in Russia in the volatility? It used to be China. Well, it's been surpassed by Russia. And now we are back with the Eiffel Tower straight up, straight down. And that is really telling me, yeah, thank you, Larry, just like trying to trade. Yeah, we're up in the air and we're just watching and we've got our stops in place, but the emergency vehicles are waiting. They're waiting for us on the landing. So we're looking at this and saying, wait a minute, that VIX index, look at these big spikes. And most of the time, except for that one spike that was back in, I think it was October. No, it was the one in November. That Fed's virus that went to the 35.32 area, that's the only one that held all the way through Friday green. Otherwise, most of the time, they break out and they have a long wick, and it takes forever for them to get back. And I suspect that this is the thing we're looking at right now. So if you want clues as to what's going to happen in the market, first of all, the longer that a market has, remember my expression is, everyone says, oh, the market hates uncertainty. I say, what are you talking about? Every day the market deals with uncertainty. The market doesn't like, it hates uncertainty about uncertainty. You go once removed, and all of a sudden you're in this vortex, this dark chamber. So what I'm saying is, if we can keep an eye on the volatility index, it's going to take, to go from 2041 up into the 26s, it's going to take absolutely, like the Fed has just woken up. Everybody at the Fed has just woken up and said, you know what, this is terrible. We've got to deal with it right now. There are the midterms coming up. Of course, we know that the Fed is never political, so it has nothing to do with the midterms. Oops, the midterms are coming up. A little sarcasm. midterms are coming up and we're going to have to deal with things. I just don't think so. I think that Powell is a different kettle of fish to Greenspan or any of the others. And he's political, but I think he modulates, and that's what the market's looking for. Just a little moderation and modulation. I'll be back in a moment.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I want to say at this moment, we go through a ton of, we have like a lightning round. So we're looking at S, which is a continuous contract of soybean, finally made the chap wave leg D. Now we're going to say, all right, you've achieved everything because you've gone to the left side cup formation. We haven't got there in the same time. We've got 2 weeks to go if it was to be the one that I'd chosen for the left side, right side price time match, but we've done it in pattern. So the 16.25 3/4 continuous contract, high that was made way back in May or so, went all the way down to the 12.13 area, and now we're back. And this is what I'm looking at. So the question came up, left side, right side with Exxon. We're looking at all of these. Can you break above it? That's always the big thing in a cup formation. So how soybeans on a short-term basis even maybe pulls back, how it breaks out on a weekly basis helps the monthly and the daily. Look at Exxon. The question came out, yep, it's starting to pull back. Well, we had the same thing in Exxon with that left side, right side price time match, but this one is a little different because it took out, if I can do this before the break, okay, there. It took out the left side high that we were looking at. No, it hasn't, of 87.36. So far the high is 80. 83.08. So we're getting a bunch of these things that are testing the highs in the commodity area. That was one I wanted to look at. And the other thing is DBA, how's that acting? We are long DBA from the 13s. It's trading at 21.09. This is broken out from the left side resistance, acting really strong, up 26 cents. This is the DBA Agriculture ETF. A question came up. Oh, if I can get to it just before we wrap up. Yes. What are you looking at in terms of the end of the week by Friday? What I want to see is not necessarily the Dow doesn't tell me. I'm just talking to you and me. I want to see the Dow closing on a weekly basis above 36,600, but preferably above 36,200. To me, that would be a really good sign. I don't want to see a break under 35,400. So I think that kind of wraps it up. I'm going to hand you over to Larry Pesavento to check out my opening call. We've had some really good trades.